All right, welcome back to another market review. Today is October 23rd, 2023. It's currently 2:54 or 5:54 New York Eastern Time. And we're going to be talking about pretty much everything I have been talking about leading up to this point right now. Last week in the video and at the start of the month, I posted on my Instagram that the draw on liquidity has been 14,578 and 3/4. That's what I've been drawing your attention to for weeks now. And what I've been emphasizing my trade ideas based on. Um, Last week I said I'm not taking anything going long, and I held my word to that. I did not take any trades going long, especially in the conditions that we're in. But before I get into that, I want to go over the monthly chart. Here we are right now. Um, you see how we traded to the high end of this inversion fair value gap right here. As soon as price closes outside of this BISI, it turns into a now inversion fair value gap, and we can expect resistance to be found while being a bearish speculator. So that happens. We retrace up, take out buy side liquidity on a smaller time frame, which you'll see as we drop down to weekly, dailies. Uh, but starting from the top, uh, the monthly, uh, this is what I see. So now that we have reached into this quarterly objective, I'm looking at the halfway point, the consequent encroachment of these two levels right here. So this candle's high, so this candle's low. That's why I just anchored both of those levels too. I'm going to take this horizontal ray, point it right at 14,088, make it we'll make it a white line. Leave it as a little bit thicker than the rest of them. Pause and change this to 14,088. So we'll also label it BISI monthly BISI consequent encroachment. Just a fancy word for the halfway point of that range. So this is the level I'm watching, as well as the low end of that entire range if we want to rebalance that. Like I said and have been preaching, price does two things: seek liquidity and rebalance inefficiencies. That is within the price category. The algorithm that I have been talking about and lecturing on for a cool minute now runs on two main bases. One, price. That's this number right here on the right side, on the right column. Price. What does the equity lie at? That's very important. You know, if you're going into a trade expecting some movement, you want to know where that price is going to go, especially from where you get in at. Number two, and which I believe is actually the most important of the two, is the horizontal our horizontal line of the bottom right here, which is time. Time, time, time. Time itself is the greatest feat and aspect of the algorithm. And not just the algorithm, but life itself, I would say. Uh, Everything has a certain time, a specific time for it. There's a specific time for everything. Um, and you have to allow for time to put a lot of things into place. You can't force something. You can't become an NBA player, NBA star overnight. Those people work very hard to get to where they're at right now, and especially the people with high occupations and uh, occupations that require lots of dedication and commitment and hard work to get there. They put time into it, and so the market is no different. Time is one of the biggest aspects of and contributes a lot to traders. So, with that being said, in the NASDAQ, we just reached our quarterly objective, recapping everything. I'm looking at 14,088, and this is the monthly time frame, and we're going to drop down into the weekly right now. But in the ES, Uh, we have been bleeding. We took out September's low as well as June's low. I'm of the belief that we're going to see 41.84 sometime this month. There's still lots of time. So I do believe that that's a possibility, as well as sell side liquidity resting below May's low. Uh, that's an overzealous target. All right, let's drop down to the weekly. All right, now last week I had drawn your attention to these two specific levels right here, the wick consequent encroachments. I had said I would not like to see price trade past them. As we did, I thought that buy side liquidity would be purged once more, especially in ES. This is more evident as this same SIBI fair value gap. So the fair value gap in the form of a SIBI, sell side imbalance, buy side inefficiency, SIBI, was unfilled as compared to the NASDAQ. We did fill that same week that created it. You see that? So this candle right here, that was the week of September 18th to the 22nd. This imbalance that was created, we filled that in the NASDAQ here, but failed to do so in ES. Instead, we found resistance at this candle's opening price, which is a weekly bearish order block. All right, back to what I was saying. If we made a new high, that would be counterproductive to what we wanted to see in price, as we are very bearish and wanted to see price run to our quarterly target, which was 14,578 and 3/4. Now, during this now previous week, but during that last week of price action, we got our Monday Judas swing. This is why I cover in Power 3. This is what it means. Uh, it's Judas swing number one. So that's the accumulation of orders. It's smart money accumulating orders and getting ready to buy and accumulate orders in a premium. What's a premium? Well, from a high to a low, this is why I did this live. So from a high to a low, that's your dealing range. You want to constantly be measuring these ranges out. So from equilibrium and above that, that is considered a premium. If you are going to trade short and go short, you want to be selling in this premium range. Why? Because you're expecting price to leave that range on the downside, like it does here, and so you're buying at a very cheap discount. Now, this is going to sound kind of ironic to what I just said, but flip the two, and if you want to go long, you want to be buying at or below that range, so in this bottom range, and that is called a discount. So you're getting price at a very deep discount as compared to think of it as wholesale prices. You go to Costco and you get prices a lot cheaper because they come in wholesale versus retail. You go to your average store, your Target, and prices are marked up a lot higher because they come from manufacturers. Even, all right, best example I can give you, gas stations. They tax. Why? Because they get prices at wholesale and they sell them individually. Now, you're going to save a lot of money by getting prices in wholesale or getting items in wholesale versus buying them individually, you know. And it's no different in the market. You're basically getting your entry of where you want to go short from at a very cheap price without suffering much drawdown or heat on that position. So, where exactly do you sell short in this range? Well, optimal trade entry. Go to my settings on my fib, OTE. That is the 62 to 79% range. So, this to this right here. That's where you want to be selling short. 2 weeks ago. It feels weird saying 2 weeks because this is only Monday, but technically it's 2 weeks ago. All right. So we come into that range, touch just about the 70% level, and quickly sell off. Now, back to what I was saying. I'm gonna get this off my screen. I don't like too much lipstick being on it. Back to what I was saying. What was I saying? All right. I believe we were talking about the wick consequent encroachments. Yes, power three. All right. Thank you. Um, so on Monday last week, and you'll get to see this on a daily chart, but this is what it looks like on the weekly. So this candle represents all of last week's price action. Um, at the end of this week, before the start of this week, I made a market review video. Go back, watch that video, and everything that I'm going to say was mentioned in that exact video before this candle played out. Okay? So, with that being said, back to these wick consequent encroachment ideas. I said I didn't want to see price trade past these levels. What I failed to mention was that I didn't want to see closure past this level on a daily basis. What does that mean? This is a weekly candle. When we drop down to the daily, you'll see where price closes specifically within that daily. When price does go past this level, that is totally permissible. That's fine. You know, even this wick right here, it doesn't go exactly to 44.29 right here. This high is this price right here. It is 44.30 and a half. Now it looks like it's right to the tick, but you could see that it's just a little bit outside of it, right? So price is permitted to wick past it a little bit. However, I was looking for a closure beneath this level on a daily basis. Now, Monday, we had an up close or a bullish day. We had a green candle, which is white on my screen. Um, and after two previous weeks of upside delivery, what do you think that retail minded traders are going to think? I'll tell you one thing, they're for surely not thinking that price is going to go lower after this. They're going to want to chase that. Bro, we've had lots of upside expansion recently. I think we're going to make new highs. That's exactly what they want you to think before they pull the rug right underneath you. So, going into the week and month, I'm a bear. I wanted to see price run into this quarterly target. What is this quarterly target exactly? Well, I showed you that on the monthly, but here is it on the weekly as well. So, as we're watching 14,578 and 8 3/4, I'm also watching this candle's low right here. Well, this candle's high, but the low of the range. You understand that? So, the imbalance is created from this candle's high to this candle's low. And so this candle's high comes in at 14,250. That's another level I'm watching right here. See if we dig into that. Consequent encroachment of this range is also um, another one, and that's going to be at about yeah 14, yeah, right around here. You can kind of eyeball it, but to give you the exact one, as we're doing right here, it's right here. 14, 4, 14 and a half. I'm going to change this back to my quarter levels so that's more visual. All right. Last thing I'm going to cover before we drop down into a daily time frame is this tail consequent encroachment as well as the weekly volume imbalance right here. So, weekly volume imbalance. From this candle's close to this candle's open, there is a liquidity void. No back and forth price action between them. Like there is here, 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 there's back and forth. This is just a gap. It's a liquidity void. There's no liquidity in between those 2 points. That is an imbalance in price. Those need to be repainted. They need to be filled. And so price comes back down to them. At first, we find support from them, not allowing both of these candles to trade into our quarterly target as we close above this candle's range. As soon, and I mean as soon as price closes beneath this range, aka last week's closing price, I of I was of the expectation that price was going to spool directly to the quarterly target right here. Now, what is permissible as a wick? Uh, to go to the high end of this range and then go back down. But now that this range and this imbalance has been rebalanced, uh, that's what it is. Simple as that. That's all there is to it. So now I am no longer concerned with this level. I will be taking it off of my chart. Bonito, bonito. All right. Now, we do have the potential for not but a fair value gap in the form of a SIBI here. So in terms of upside potential and scaling, uh, I'd like to see 14,949 and a quarter. Do I think we'll see that? Most likely not. Is it possible? Yes. Yes. Anything's possible in the markets. I'm just giving you ideas. Now, back to the educational part of it, which I just kind of covered right there. I just kind of gave you a little gem with the volume imbalance and closures and what you expect to see, or want to see in price. Because everything is fractal in price. Everything that applies to a monthly, weekly, daily time frame applies all the way down to your 15-second time frame. It's a high frequency trading algorithm. It doesn't matter what time frame you're on because time is fractal. All that changes is how long it takes for price to deliver to certain prices. So time and price, time and price. Just nail that into your head over and over. Time and price, and you'll understand it eventually. Now, let's get into the daily, as this is already turned into a job owning session. I want to keep it short, under 30 minutes, because I know some of you guys' attention spans are not that great, and I do want to get to the brass tacks of everything. So, I went over this already. This candle's open, and the vertical line is the open of the weekly range. You get that? So, let's go back. The open. This is that same open. Now on Monday, this candle is white. This candle is at the wicks high right here. It is a white candle. That's at the start of the week. Even on Tuesday, from the open of the week on Monday, I'm gonna make this big again. Pause. Even after Tuesday, that candle is still white. This is wrong. It's right here. All right. So, all right, back to what I was saying. On Tuesday, the weekly candle is still white. Now, although we did trade all the way down here, so think about that. I just trying to give you an idea of how fast price can change. I think some people think that you know trading the daily or weekly chart is so hard, and it's like why would you do that? It takes so long. But no, this is actually like it's converse to what people should be thinking. Retail trading, what the industry promotes is, oh no, spend your time on the smaller time frames. You want to be in and out, you want to catch these moves. No, you don't want to do that. Trust me, you do not. I did the same thing and I got hurt. I did not make a single penny spending most of my time and not analyzing the smaller time frames. Everything changed when I flip my perspective. All of your analysis should come from the top down. That's why I start with the monthly, down to the weekly, and down to the daily, and so on. And back to the whole big emphasis of this market review is time and price. Price is the same no matter what. It doesn't matter what time frame you're looking at it on. It doesn't. All that matters is this number right here. For example, we're going to take we're going to take the EES because they have easier numbers. So, right now we're on a daily time frame and we're looking at the price range all the way up from 46.86 all the way down to 41.95. Let's round up. Let's say that this is 4,700 and this is 4,200. Cool. That's at how much price we are looking at right now. Duh, right? Yeah, okay. All right, so when we drop down into an hourly time frame, look at what changes. Even if I scroll out here and we have this amount of data, from 4,700 to 4,200, now we're only looking at 44, we'll round up to 4,450 to 4,200. Now we can't see, we visually cannot see a whole 250 handles. Do you get what I'm saying with this? I pray that you do because it is huge. All your mind sees is this and it doesn't think of the bigger picture. It's closed off. You close your mind off to that, and you have to be a visionary when it comes to this. You have to know that price is changing here and it's changing on the as high as the monthly chart. I promise if you look at price for a single day, a single fluctuation day in price, you'll see just how fast price can move on a monthly time frame. Because it moves, it goes, it travels. But to further emphasize what I'm saying, let's go down to a minute. Now, from 4,700 to 4,200, we're only looking at, let's see, the high, like 42. Now we're just in the 4,200s. We can't even see 43 all the way up to 47, right? It's completely out your mind if you don't have these levels marked and annotated somewhere for you to draw back to and see. Understand? And so that's why I emphasize having a separate, like a notepad of, all right, monthly important levels, important monthly levels, important weekly levels. For me, it is different layouts, different learn. I have a monthly, like my monthly levels I'm looking at, my weekly levels, all the way now we're looking at daily levels, and it's the time and price continuum. That's all I'm trying to teach to you right here as a position of mentor. This is what I'm trying to heavily pass on to you. This is what I need you to understand in order for you to understand the algorithm. And once you understand the algorithm, you can read price and understand where it's likely to head next. And when you understand where it's likely to head next, insert some entries, protective stop loss, impeccable risk management, manage yourself, control your emotions. That's all the feats of a professional trader right there. So, with that being said, let's drop back out to the daily. These wick consequent encroachments. I'm going to bring you back to the weekly. These are the same levels. Now, on a daily time frame, what's changed? The amount of price that we're seeing. And what happens within this candle. So, last week was very hard. It was tough conditions, and a well-seasoned trader would sit on their hands knowing that there's likely small setups to form, And when they do present themselves, there is a chance that you could still be wrong. So, in order for me to assume risk and put on a trade, knowing that if I'm wrong, I have to own it, I'm going to limit that. So I went into the week knowing I'm only going to be selling short and I'm only going to do it under certain conditions. What is one of those conditions? Daily closure underneath this wick's consequent encroachment. I just said it, but I'm saying it again so I can remind you. I don't expect you to remember everything. I'm catching it up in your brain. So, in the Nasdaq, we did get to see price stay below this level on a daily basis. We gapped up the next day, filled that, and we had news drivers at about 8:30 New York time, which just pushed price into sell side liquidity. I had drove, not drove. I have, sorry, I'm sorry. I'm trying to think of the right word. I cherry picked. I don't want to say cherry picked. I drove your attention. What's the word I'm looking for? It's kind of bothering me. I I drew there. Thank you. All right. This has happened twice now. I hope that there's not a strike three because I'm going out if that happens. But anyway, I drew your attention to 15,083. That is this candle's low. So the previous day's low with an overzealous target of 15,062, which is Friday's low. So last week's on Friday, that low. Now, the reason I took the trade in the NASDAQ is because look at ES. What's different from it? I'll give you a hint. It's what I just talked about when I said I was catching your brain up. Yes, yes. We closed over this level. Now, that is a condition that I put on myself. I said if price closes above this line on a daily basis, I will not be taking a trade. Simple as that. Now, although price did trade lower in ES, notice how it doesn't reach the previous candle's low nor Friday's. Versus in NASDAQ, it did respect the conditions that I did want to see, and look at how it delivers differently. Right. So that is exactly why I decided to take and draw your attention to 15,083 that morning. Now, I know multiple times throughout the weeks where I could have been hurt had I taken a trade, but with the conditions that I did see, I knew to just sit on my hands. There's a wave of traders that come in, having this want it now, want it now, want it now mentality. Um, but this flawed way of thinking is very dangerous to a career that has longevity in the hearts of seasoned professional traders. What do I mean? The faster you come into these markets, the faster you're going to leave them. You're going to come in thinking, or you're going to come in, you're going to throw a bunch of money on the line, lose it all quickly, and blame the industry and blame everyone else besides yourself for losing that money. And you're going to say, "Oh, it doesn't work. It's a scam. It's all bull crap." No. No, 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 no. You are the scam. You are the failure. You're the one that failed at this. Not anyone else. You. You made the mistakes and you couldn't own up to it. The ones that make this work are the ones that know they are six. They they eat it. They eat at their success. They know that they're the ones responsible for their inevitable success or their inevitable shortcoming. I eat every single one of my losing trades. I know when I'm wrong, I did something wrong. I messed it up. I did something I wasn't supposed to. I got it wrong. It wasn't the algorithm. No, no, no. The algorithm works for everyone. If it doesn't, why do you see a bunch of people? Why do you see? All right, I just don't want to be self-centered, but why do you see me out here doing this? Why do you see me and everyone that took the time and effort to put the energy in to do this? How are they able to make it work? Because they're the ones that are making it work. It's not some pipe dream. It's not. It's completely possible. It's all within the realm of responsibility. Well, I said that a little bit prematurely. It's all within the realm of possibility, but in order to achieve that, there has to be a lot of responsibility and accountability. It's possible. You can do this. I'm living proof. I knew nothing. I knew nothing of the markets, and for 4 months I was fed retail crap. Double bottoms, chart patterns, Elliott wave, supply and demand, trend line support, dynamic support and resist. It's all the lies that this industry feeds you to come in thinking that it's a get rich quick scheme. And if you allow a, an amount of money to be taken from you, the markets will gladly step in and snatch it up. If you make yourself a nail, they will gladly be the hammer. So, with that being said, daily volume imbalance happened on the gap from Thursday to Friday. We come up, touch the high end of the range, quickly sell off to take out this candle's low. I'm gonna try to wrap this up quickly. I don't think I'll drop down to the smaller time frames on this video. I really don't want to hear how I sounded, but it's okay. We purge the low. As soon as this happens, we retrace into 20 to 30% of the weekly volume profile. Now, it's going to be hard for you to see when I place it on here, but price retrace into 14,783 and a half. And then to end the day, we rallied lower. Now I kind of want to get into the smaller time frames, but I'm not going to for time purposes. And I have things I need to do after this. So the way this candle delivered here on Friday was a sure tell sign of the expectation of where we wanted to see price head to. This black line, same level, 14,775 and 3/4. Same exact level, just daily now. This candle closure on Friday underneath it is the same as price closing beneath it on a weekly candle. And so when that happened, it was kind of like, all right, yeah, it's tipping its hand, this is exactly where it wants to go. Remember, wicks do the damage. The bodies of the candles will tell you the story. Prime example, look at this. Wicks, wicks. Look at the bodies. Where did it close? Beneath this daily bearish order block, and it held price at bay. Oh, then what is this candle right here that wicks up and goes past this one? I'm glad you asked. I'm glad you asked. What rests below? pause, rewind. What rests above old highs and below old lows? Well, I covered that at the start of my video in the last market review. Liquidity, active orders. Above old highs, there is buy stops in the form of buy side liquidity. So that would have been this candle right here. That's what it looked like prior to it being taken out or purged. And then below all lows or relative equal lows, such like or just as we have these two lows right here. It creates the double bottom illusion, even rallies price higher into where a premium, this candle's high to this candle's low, equilibrium above 50% of that range is a premium. I just covered that in this video as well. So back to what I was saying. This candle, this sole candle right here, we gapped up. We didn't close over it. We gapped up and opened above it so that we could run into this imbalance from this candle's low to this candle's high. That is a fair value gap in the form of a SIBI, as well as take out buy stops above this candle's high on the daily time frame. This is a higher time frame liquidity pool. All of these highs and lows, they're constantly being taken out one after the other. Like, just look at this. Look at it. Here, high, low. Next day, oh, take out the sell stops. Okay, next day, kind of range day, but we take out the previous day's high. Next day, we take out the previous day's low and expand higher to take out all of the buy stops that were here. We expand up higher, get retail to chase price up, and then quickly deliver it back down and pull the rug on them. It's all there. It's all there, laid out directly in front of you. You just need to understand what it means and how to navigate it. Once you can navigate it, I mean, you have your map. You don't need me. You don't need BSU. You don't need Mando. You don't need Zachariah. You don't need them. My goal, and it should be yours as well, your goal should be to be an independent trader. You think for yourself, you execute for yourself, your actions are yours alone, and that simply is that. Now, when you're new to these things, it's like a baby learning how to walk, a baby learning a new language. You have to have a parent, you have to have a teacher, and that's all I am. That's all I am. I'm the launch pad for you. But when the time comes, I want you to toss yourself out of that eagle's nest, and I want you to just fly high, and that comes with time. How long it takes, now that's up to you. How badly you want it is completely up to you. You could dedicate 5 years to this. All right, I'll give it 5 years. Maybe I'll do 2 videos a week and just casually go through it, and I'll be there one day. Or you could be like me and just go in straight overdrive mode, just straight hyperdrive, no Millennium Falcon. Just go straight into that and just knock out. All right, I'm doing 7 videos a week. 14, 2 a day. I want this. I want this bad. I know that there's a skill set in this that no one can take away from me. Not one. Once you have it, it's yours. Once you have it, it's yours. No one can take it from you. Not one person. The way you think about the market is yours and completely yours alone. I can't take it from you. I can't tell you to say, hey, you can't think like that anymore. Who is going to come, honestly, who is going to come into your brain and rewire it? It's not going to happen. It's not, unless you get amnesia or something, which God forbid. But once you obtain the skill, it's yours. I can't take it from you. I'm the one that wants you to learn this. I want you to come and get this. Because once you learn it, you can outpace inflation for the rest of your life. You have a skill that is completely scalable, and you'll be able to compound your money until the day you die. And yes, I know money's ugly. Money is an ugly thing, but it is mandatory in this world based off the meaning that the government gives it. If I had it my way, I would be selling goats for a living. But here I am. All right, I'm going to stop myself there. I hope you found something insightful from this lecture. Uh, I need to go. Yeah, I need to go and do some talking with the big man. So uh, I'll see you when the time calls for it. I have a feeling that it'll be soon. Until next time, be safe.